What if I told you that the world's richest investors are quietly shifting billions of dollars away from gold, the very asset they once swore by, and into something that didn't even exist 20 years ago? Here's what's shocking. In 2025, for the first time in history, the total value of Bitcoin held by institutional investors surpassed the combined gold reserves of several major nations, including Canada and the UK. That means digital coins, created through computer code, now rival one of humanity's oldest stores of value. This isn't just another crypto headline. It's a once-in-a-century financial turning point, one that's forcing even the most traditional billionaires to rethink what wealth preservation really means. According to a Bloomberg intelligence report from earlier this year, billionaire investors have split into two camps: the gold guardians, who see digital assets as a dangerous fad, and the Bitcoin believers, who view it as digital gold for the 21st century. But the question we need to ask isn't just which asset will perform better. The real question is, what are the smartest billionaires actually betting on, and why now? Before we dive in, tell us in the comments, if you had to put $10,000 into either Bitcoin or gold today, which one would you choose and why? We read every single comment, and your thoughts might even appear in our next video. Now, let's get into what's really happening behind closed doors, where the world's wealthiest minds are placing their bets. To understand why billionaires are suddenly favoring Bitcoin, we have to go back to a deeper issue: trust. For most of modern history, wealth meant something physical. You could touch it. Gold bars in a vault, real estate on land, stocks backed by real companies. These were tangible things. But starting around 2008, that trust began to crack. When the global financial system collapsed, millions lost homes and jobs, while major banks got bailouts. The message was clear: the system doesn't always play fair. Out of that chaos, in January 2009, an anonymous figure named Satoshi Nakamoto released a strange idea: a form of money that required no banks, no governments, and no middlemen. He called it Bitcoin. At first, it was dismissed as a nerd experiment. One coin was worth less than a penny. But beneath the surface, the technology behind it, blockchain, solves something gold never could: provable scarcity. There will only ever be 21 million Bitcoins, ever, not one more. Compare that to fiat currencies, where central banks can print trillions overnight. The US alone printed over $5 trillion during the pandemic years. For people who already had billions, that wasn't good news. It was a warning sign. Ray Dalio, founder of Bridgewater Associates and one of the most respected investors alive, once said, "Cash is trash." His reasoning: the more governments print, the less each dollar is worth. And this is where billionaires started paying attention. By 2020, names like Paul Tudor Jones and Stanley Druckenmiller, both legendary hedge fund managers, began publicly investing in Bitcoin. They called it digital gold, and for good reason. Over the previous decade, Bitcoin had outperformed every major asset on Earth. Between 2011 and 2021, the price of gold rose roughly 11%. Bitcoin, over 7 million%. Of course, volatility scared many off, but those who understood cycles, those who could zoom out, saw something deeper. Bitcoin wasn't replacing gold, it was evolving the idea of what gold stood for. Gold has been trusted for 5,000 years because it's scarce, durable, and universally valued. Bitcoin took those same principles and upgraded them for a digital world. Instead of digging it from the earth, miners now verify it through code. Instead of vaults, there are cryptographic wallets. Instead of governments, there's mathematics. And in a world where AI can generate fake everything, images, news, even identities, provable, unchangeable value has never mattered more. But not every billionaire agrees. While some are doubling down on Bitcoin, others are quietly returning to gold for reasons that might surprise you. For every billionaire piling into Bitcoin, there's another quietly doubling down on gold, and they're not being irrational, they're being cautious. To understand why, let's look at how billionaires think about risk. When you already have more money than you can spend in 100 lifetimes, your goal stops being making more. It becomes not losing what you have. Gold has survived everything: wars, crashes, pandemics, and political revolutions. It's been used as money for more than 5,000 years. Empires rose and fell around it, but gold kept its shine. Even when entire currencies collapsed, the German mark in the 1920s, the Venezuelan bolivar in the 2010s, gold still bought food, shelter, and safety. Warren Buffett, who famously called Bitcoin rat poison squared, has long stood by gold's reliability, or at least its psychological value. He once said, "Gold is a way of going long on fear." And that's exactly why many wealthy investors still hold it, not because they expect to get rich, but because they know it never goes to zero. In 2024, central banks around the world bought over 1,000 tons of gold, the highest level of purchases in more than 50 years. China, India, and Russia were among the biggest buyers. Their reason? To protect themselves from potential instability in the US dollar and Western banking systems. Even Elon Musk, one of Bitcoin's most famous supporters, admitted that while he believes in digital assets, physical resources still matter in a crisis. He once said, "If the internet goes down, Bitcoin doesn't exist, but gold still does." That statement might sound extreme, but it highlights a real tension. Bitcoin lives entirely in the digital world. No internet, no access. Gold, on the other hand, is tangible. You can hold it in your hand, hide it, or transport it across borders without permission. That's why traditional billionaires, the old guard, still see gold as the ultimate insurance policy. Ray Dalio, even while investing in Bitcoin, still holds large positions in gold and related assets. His reasoning is simple: diversification. If one system collapses, the other survives. But here's where the story gets interesting. While gold protects the past, Bitcoin is being used to protect the future. Let's look at how the next generation of billionaires, people who built their fortunes in tech, not oil or banking, are making a very different bet. The new generation of billionaires doesn't see wealth the way their predecessors did. They don't collect art for status or store gold in Swiss vaults. They build networks, code, and infrastructure that shape how the world operates. And that's exactly why Bitcoin speaks their language. People like Elon Musk, Jack Dorsey, and the Winklevoss twins were among the first billionaires to treat Bitcoin not as a speculative gamble, but as a technological inevitability. Jack Dorsey, founder of Twitter and Block, formerly Square, once said, "The internet needs its own native currency. Bitcoin is that." He didn't say it for hype. He meant it literally. To this new class of billionaires, Bitcoin represents the same revolution the internet brought to communication: decentralization, transparency, and independence from legacy control. While old money relied on banks and central authorities, new money was built by disrupting them. Think about it. Uber disrupted taxis, Airbnb disrupted hotels, and Bitcoin aims to disrupt the very foundation of money itself. Cathie Wood, founder of ARK Invest, believes Bitcoin could hit over $1 million per coin by 2030. Her reasoning is simple math: scarcity and adoption. With institutional investors, corporations, and even governments beginning to hold Bitcoin on their balance sheets, supply is disappearing faster than ever. According to recent reports, over 75% of all Bitcoin hasn't moved from its wallets in more than a year. That's not speculation, that's conviction. And for billionaires, conviction is the difference between risk and opportunity. Mark Cuban once admitted that he used to mock Bitcoin until he realized it shared the same network effects that made his early internet companies valuable. Now he calls it a better version of gold. This mindset shift is more than profit, it's philosophical. Gold is static, it sits, it waits. Bitcoin evolves. It's programmable money, capable of moving across the world in seconds with zero permission. When you control billions, that kind of freedom matters. Imagine this: a billionaire in Singapore can move $100 million to Switzerland in under 10 minutes using Bitcoin. No bank approvals, no fees, no politics. With gold, that would take trucks, guards, customs paperwork, and weeks of coordination. For tech billionaires raised in a world of speed and automation, that's not just convenience, it's power. Still, even these visionaries know that Bitcoin isn't without flaws. Its price swings can be brutal, regulations uncertain, and energy use controversial. But that volatility is exactly what early investors thrive on. They're not betting on today's price, they're betting on tomorrow's adoption. And they might have good reason. Institutional Bitcoin ownership is now at an all-time high, with firms like BlackRock, Fidelity, and Morgan Stanley quietly offering Bitcoin exposure to their clients. These aren't fringe crypto startups. These are the same institutions that manage trillions for the world's richest families. To them, Bitcoin isn't a rebellion anymore. It's insurance against inflation, against central bank mismanagement, and against the slow decay of traditional finance. And while gold still shines, it's starting to look more like a relic of stability than a symbol of innovation. But before we decide which side will win, let's look at the numbers, the performance, returns, and what history actually tells us about the future. Let's strip away the hype and look at the facts. Over the last decade, gold has done what it's always done: preserved wealth, not multiplied it. From 2013 to 2023, gold prices climbed about 55%, averaging roughly 4% annual returns. That's steady, predictable, and respectable. Now let's compare that to Bitcoin. In the same 10 years, Bitcoin's price went from under $100 to over $60,000 at its peak. Even after massive crashes and rebounds, it still outperformed every major asset class: stocks, bonds, real estate, and yes, gold, by a staggering margin. If you had invested $10,000 in gold a decade ago, you'd have about $15,000 today. That same $10,000 in Bitcoin, even after multiple crashes, it would be worth over $2 million. The data is brutal, and billionaires notice. But it's not just about past performance. The real story lies in correlation. Gold tends to rise when fear dominates, during wars, recessions, or inflation spikes. It's defensive. Bitcoin, on the other hand, rises with disruption. When technology advances, when systems evolve, when new capital enters, Bitcoin grows. In 2020, during the height of the pandemic, both assets rose sharply. But look closer. Gold peaked in mid-2020, then flatlined. Bitcoin kept climbing for another year, gaining over 400% by April 2021. The reason is simple. While gold investors reacted to fear, Bitcoin investors were building a new system around it. Even major institutions have taken notice. JP Morgan's research in 2024 showed that institutional investors now view Bitcoin as a high volatility hedge, similar to venture capital, risky, but with unmatched upside. While gold still generates annual demand mostly from central banks and jewelry markets, it doesn't produce yield, it doesn't create technology, and it can't be transferred digitally without intermediaries. That's why analysts call Bitcoin the first self-upgrading store of value. Its network gets stronger, faster, and more secure every year, while gold remains, well, gold. But let's be clear, that doesn't mean Bitcoin always wins. Its volatility can wipe out 50% of value in months. Billionaires who hold it usually hedge that risk with real assets, including gold. So instead of Bitcoin versus gold, the world's smartest investors might already be thinking Bitcoin and gold.
In fact, recent portfolio models from Yale and MIT suggest that adding even 2% Bitcoin exposure to a traditional portfolio of stocks, bonds, and gold improves returns by up to 25% without dramatically increasing risk. That's why billionaires aren't choosing sides anymore. They're positioning. They're buying gold for stability and Bitcoin for acceleration. Gold defends, Bitcoin attacks. And together, they form a modern wealth strategy that bridges the past and the future. But if both assets have value, the next question is, where is the momentum heading right now? Let's find out what billionaires are actually doing in 2025, where they're moving their money, and what that tells us about the next decade. For years, billionaires treated Bitcoin like an interesting experiment, something to watch from a distance. Not anymore. The tide turned quietly in 2024 when the world's biggest asset manager, BlackRock, launched its own Bitcoin ETF. That single move legitimized the asset overnight. It told traditional investors, this is no longer a gamble, it's an instrument. Within months, Fidelity, ARK Invest, and Morgan Stanley followed. Now, billions of institutional dollars are flowing into Bitcoin through regulated funds, the same kind of vehicles billionaires already use for equities and bonds. Meanwhile, gold isn't fading, it's just changing hands. Central banks, especially in Asia and the Middle East, have been buying gold at record levels. In 2024 alone, they added over 1,000 tons to their reserves, the highest in modern history. So here's what's really happening. Old money, governments and central banks are doubling down on gold. New money, tech billionaires, hedge funds, and private investors are moving into Bitcoin. It's almost poetic. Gold remains the currency of nations. Bitcoin is becoming the currency of networks. In 2025, Bloomberg reported that over 30% of the world's billionaires now own digital assets in some form, whether directly, through ETFs, or via private crypto funds. That number was under 5% just 5 years ago. Even billionaires who once dismissed Bitcoin are hedging with it. Ray Dalio, who famously called Bitcoin a speculative bubble, now admits to holding both Bitcoin and gold. His reasoning? Cash is still trash. You need assets that governments can't print. And it's not just the finance crowd. Celebrities, athletes, and founders are diversifying into Bitcoin-backed investments, NFTs tied to real estate, and digital stores of value. The idea isn't just to make money, it's to stay sovereign. Here's something subtle but powerful. Billionaires aren't talking about trading Bitcoin. They're talking about owning it, quietly, long-term, off exchanges. Wallet activity among high net worth addresses, those holding over 1,000 Bitcoin, has risen more than 20% in the past year. These aren't day traders. They're the whales of the financial ocean, and they're accumulating, not selling. So what does that tell us? It tells us that the next wealth wave isn't about short-term speculation. It's about positioning for a monetary reset. Think of it this way. Gold built empires in the old world. Bitcoin is building influence in the digital one. Both assets are gaining, but for very different reasons. Gold thrives on fear. Bitcoin thrives on belief. And right now, belief is spreading faster than fear. Gold and Bitcoin aren't enemies. They're chapters in the same story. One built the old world, the other is rewriting the new. Billionaires know this. That's why they're not choosing sides. They're holding both. Gold for safety, Bitcoin for possibility. The truth is, the financial system is shifting faster than anyone expected. And those who understand this new balance between tangible and digital, tradition and innovation, will own the future. If you learned something today, hit like, subscribe, and share this video. It helps more people understand what the world's richest already know. Money is changing, and so should you.